Welcome back to Property Play. I'm your host, Elena Saradidis, and today I'm with Gary Freedman. He is a builder extraordinaire. He's going to tell us a little bit about how he got started in development, and if you've seen all of our marketing regarding 47 Mutual, that's his building. So we're going to get to know a little bit about how he started.
Great. Thank you for having me here. Where to begin? I started my career in the legal profession. I was a lawyer. I have a family background in real estate development, and I always had a passion for real estate, but I went through university and decided to become a lawyer and practice law for close to 10 years. But even during that time, whenever I had clients that came in that had a real estate problem, I was a litigation lawyer. It would distract me to the point where I realized that the passion for real estate was stronger than the interest in continuing in law. So eventually, I exited the legal profession and became a real estate developer and builder full time. So that's how I went to it full time. But I'd always dabbled in it because my family had some real estate, and even during law school and just after that, I was sort of doing it part time on the side.
And what was the first development you've ever done?
So I started very small. Well, the very first thing I did was a commercial plaza in Vaughan, in Maple, because the family had some land there, and my dad had passed away, and there was an opportunity to develop this commercial piece. And I was probably somewhere between law school and starting to practice law. Had some help from the family to learn the ropes. I had an uncle who was a lawyer who was experienced in real estate, and we built the plaza. But then I started practicing law, and I didn't do very much. But when I decided to leave, the next thing I did was something on Avenue Road, was a retail residential, small, sort of lofty residential building with 6 apartments and some retail. And then after that, I actually went sort of backwards and started doing 1 house, 2 house, just starting to learn the actual construction process. Because I knew about financing and I knew about some of the legal stuff, but I wanted to understand construction. So I started very small and put on construction boots and went to the construction site and watched the guys working and asked questions and started to learn about how to build. And that was a long time ago. And I'm not going to tell you how many years ago it was.
Oh my goodness. Well, what about residential condo buildings? Like, kind of, what was your first? Like, what was like the one that you're like, oh my God, I'm a builder now?
Right. Well, I always felt I was a builder. I mean, doing the commercial stuff was the plaza in Vaughan, was on 1.5 acres of land. It wasn't tiny, but so I actually really thought, even in the commercial stuff and the stuff on Avenue Road, I was a builder. But I guess when I started doing townhouses, multiples on small sites, and then got a little bigger and did stacked townhouses, I guess when I was doing project after project, low-rise towns, stacked towns, that's probably when I said, this is truly my occupation.
Okay, amazing. What kind of helps you determine what site you're looking for? Like, when you're looking to buy a project, is it price? Is it location? Like, what are you looking for?
I mean, my focus now is on high rise. So I've moved away from low rise construction. But back in those days, they were all infill sites in the city, or near to the city. I did a little bit in Etobicoke. I did something in Oakville. But typically I looked for stuff downtown. It was still possible to find an infill site downtown for low rise. And I looked for the usual things. I wanted proximity to transit. I wanted something that was within an existing neighborhood that people could identify with right away. So it could be Dovercourt Village or Riverside, even North Avenue, like North York, stuff where people wouldn't have a hard time understanding why they wanted to live there, and they could gravitate to it easily. So I didn't have to put a ton of marketing muscle into it, because those smaller projects, you just don't have the budget for that. You're not going to build a big fancy sales office or do a lot of advertising. You're typically actually building first and selling it as you go or after you even complete it. So you're not working with pre-con. You're not doing pre-con sales. So it's a different mindset. You really need something that you're not going to struggle to sell once it's built, because then you've got a lot of money invested and you're trying to unload stuff. So it helps to have a neighborhood that's established. I've changed because I'm now doing pre-con. So with pre-con, it's a different mindset. We do plan ahead, and we look at demographics, we look at logistics, we still look at transit. Transit's huge. We look whether or not other builders have entered that market, have done stuff in the area. Have they established a market for condos? We are piggybacking. We're small. We're doing one building at a time. So we're piggybacking on what may have already become an established condo neighborhood. And if we can find a site that we think may have been overlooked, might be a little too small for some of the bigger guys, but still it's within the node, and we can sort of make the numbers work. That's kind of what we look for.
Can we kind of dive into the numbers a little? Like, how much does it cost? Because I go through this every day with people. I'm like, developers wouldn't build unless it actually makes sense for them to build.
Right.
So what are you noticing as the average cost to actually build it versus what are you seeing on the resale market now?
Right. So that's a good question. There's a lot of misconception because people read articles in the media and they think that they understand a little bit about the numbers, but typically the journalists don't get the numbers right, either because the person they're interviewing doesn't want to tell them the truth, doesn't want to disclose proprietary info, or the journalist just doesn't understand what the hell they're being told. So, it's tricky to talk about numbers right now because things are in flux. We're in a downward market. The market's not stable. I think the market's still moving down in the condo high-rise market. So I don't know if I can attach specific numbers, but I think by reference to what things were selling for and what things cost, let's say back in 2021 or even earlier, the new pre-con stuff is priced in relation to resale prices. We can ask for a percentage lift from resale because you're buying something off of plans that won't be completed for 3, 4, 5 years out, maybe even 6 years out, depending on how big the building is. So people expect to pay more because they're hoping that the market will increase during that intervening period. But you can't price it at 50% above resale because no one's going to pay that. There's a problem right now as well with investor confidence. People that bought sort of later in the cycle, let's say after 2020, are upside down. They've had to, probably their unit closed last year, this year, maybe next year. And they're looking at a price that's probably less than what they purchased it for. Could be considerably less. Could be between 20 and 35% below what they paid for it. So they're not willing to enter the market now and buy another unit because on paper they've lost money on the one they just bought. It's probably not carrying either. So they can't sell it because if they sell it, they're going to take a big hit, 35% hit. If they rent it, they're probably not meeting their carrying costs.
Yep.
Because the units were expensive. The ratio of the loan amount to the purchase price means they've got a big mortgage. Rates have come down. I wouldn't blame rates at the moment. It's just the size of the mortgage. The operating expenses of these buildings has gone up, so their maintenance fees are a little higher than what they expected. Realty taxes are a little higher than what they expected. You roll it all together, and they've got a monthly bill that exceeds their incoming rent.
I think when the market was hot, and everyone was just like, get me into any unit. Let me just buy something because it was moving faster than we could have ever imagined. Right. Everything was on fire. So when they were seeing prices, they're like, if things continue the way they're going, is it shocking to think that something that's 500 square feet reaches a million? And it wasn't shocking at that moment
Sure.
because we were getting there. Like there were projects that resale, it was selling in the 900s for a property that's a 1 bedroom. And you're like, if this is completed in the next 5, 6 years, maybe mine will be worth $1 million.
Yeah.
So people had a different expectation. And I also think a lot of people got caught in, we're going to sell it on an assignment and we're going to make money.
Mm-hmm.
And I think the best piece of advice, and you correct me because you're the expert in the field, you are. I would never recommend to buy something with the intent to assign it,
Right.
like buy with the intent to close. Because if you get caught on the assignment sale, you be prepared to close because developers will come after.
Absolutely. Yeah, I think the euphoria, it's typical of any rising market, the stock market, precious metals, gold, silver, whatever. When people start to think the sky's the limit, they jump on the bandwagon. Typically, by the time that information is widely disseminated, it's a little bit late to be jumping on the bandwagon. And, unfortunately, real estate is cyclical. I've seen it before. I'm old enough to know and to have experienced the early 90s. So, there was a peak of the market right around 1989, 1990. And then we had some very lean years through the 90s. And in particular, the early 90s, people took a big hit, similar to what's happening right now. There was a 2 to 3 year period where, prices just kept going down and down. Like people said, is the market, has it bottomed out? Well, turned out it hadn't. Things started to improve maybe mid-90s. They started to get a little better. There was stability, but I don't know about, there weren't huge price increases, but there was stability. But people who bought at the peak of the market in 1989, or early 1990, and then sold in 92 or 91, 92, 93, they lost money. Now the numbers were much, much lower. Condos, believe it or not, at that time were selling for $250, $300 a square foot. But it's all relative. People still lost, 25%.
100%.
So, they might have bought something for $300 a foot and then they ended up selling it for $225 a foot. It's just the way things are. Real estate is cyclical. So right, to your point, can you buy something with the idea of just assigning it? No, but there's all kinds of personalities in this world. There's all kinds of people out there. Some people are just riverboat gamblers. They will go to the casino and go black or red. I don't know, I'll go red. And they'll push in like 10 grand. Well, does that make sense? No, it doesn't make sense. But they do it.
And I do think in this market, even if we're not at the bottom, which I kind of think we might be, I do think that if you're buying a property, that the replacement cost of the property costs more than what you're buying it for,
Right.
you're doing well.
Right.
Because eventually the tides will turn. So if you can find something, and there is in this market, properties that are selling for 700 a square foot, 800 a square foot, it's a deal.
Yeah.
Because a cost for a developer to redo it,
Yeah.
and you correct me if I'm wrong, but I think it's around 1,100.
Yeah.
For us to build, it's going to cost some money.
Yeah, the variables are the land price. That's why I didn't want to assign any numbers to your question because, land prices are moving. Cost of construction is moving as well. I mean, land prices have fallen for developers to acquire land. If you can get a site, now, vendors are sticky. They're resistant, just like sellers in the condo market are resistant. Nobody wants to take a hit. Nobody wants to lose money. The transaction that I'm just in the process of completing, it's a receivership sale. The bank doesn't want to lose money, and they can afford to easily, but they don't like it. They don't like it, so they don't do it. They take their damn sweet time. It takes a year and a half to make a deal, but eventually, they do. So you're right. If you can get something in that price point, Toronto, you can't bet against Toronto in the long run. Cannot. We have gazillions of dollars going into infrastructure. The infrastructure is going to drive this city in the future. We've got a brand new subway being built called the Ontario Line that's going to crisscross the city. We've got, the whole development of the Cherry Beach lands, which has just started. All the infrastructure has been put in place. All the bridges are there. All the water treatment is there. All the flooding protection is there. So that's a huge thing that's going to drive the city. The subway is going to drive the city. you don't bet against Toronto. But how long will it take? But if you can buy it, if you can buy something at 800 a foot, it's a no-brainer. It's absolutely a no-brainer. In my opinion, even if you're buying at 900 a foot in the resale, I think it's a no-brainer. It will go back. I mean, you probably saw those sales in 2022. You probably did some deals at, I don't know, 1,300 a foot, 1,400 a foot. I don't mean pre-con. I mean like resales.
100%. Look, the market was moving really quickly. And I remember a point in time where we were turning to our clients and saying, you either overpay today or you way overpay tomorrow.
Right.
And that was the market.
Yeah.
And I think where sellers kind of get caught in this market is there's a perceived loss.
Right.
You weren't on the market at the time.
Right.
You didn't actually lose any money.
Right.
No one ever offered you that money for your place.
That's right.
So just putting, expectations in check that you're not going to get the same numbers you would have gotten in 2021, 2022.
Right.
We don't know when those numbers will come back, but it's a good chance that if we were there at one point, we'll go back there again.
Yeah, for sure.
It's just going to take time.
And people, if they bought, that many years before, if they bought, I think the break-even point is somewhere around 2018, 2019. People who bought pre-construction shouldn't have paid, it depends where. Obviously, east side of Toronto, west side of Toronto, central Toronto, subway line, University Avenue, Yorkville, it's all different. But if they bought in 2018-ish, they should be breaking even. They should be breaking even, in my opinion, or close at pre-con. And I'm not sure what the resale market was then. It should have been lower than that. So, and people make decisions about real estate, really they should be making them for like, these are big life decisions for a purpose. Like they're getting married and they need a bigger place. Some person's living in a studio or a small 1-bedroom and they're getting married. If they can sell that unit and break even and buy something that they need or desire at a very good price, there's a chance they're going to make money on that other deal. Very 100%. High probability.
And that's what I've noticed in this market too. Like we still have people selling their properties that bought them in that peak period. But the way that they're viewing it is I might lose a little on the place that I bought, but I'm going to gain so much more on the place that I'm buying.
And that's
that
correct.
It equals out.
That's correct. As long as they're buying right, on the next place. I can tell you my own personal experience. I owned a condominium at 251 Queens Quay West, which was the Admiralty Point condos, which at the time were connected to a hotel. It first opened as the Admiralty Point Hotel, which was not a branded hotel. Then it became the Radisson. Right beside what's now, there's a new restaurant concept that just opened.
Queen Harbor.
Yeah, Queen Harbor.
Yeah.
So I lived in that building I think I bought that unit in 1987 or 1988. I think I moved in there in 88. I think I bought the unit in 87, somewhere around there. And then I sold it in, when would I sell it? I think I sold it in 1991, approximately, 1991. And it was a bad time to sell. So I lost probably, as I recollect, I probably lost net with commissions and everything. I probably lost like 60, 70 grand, which at the time, that was a big percentage. I think I bought the unit for just over 300,000 and it was 1,200 square feet, 1,100 square feet for $300,000 on the water on Queens Quay, with a parking space. And I sold it for a loss, but then I bought something and ended up building a 5-bedroom home, Avenue Road and 401 on a ravine. And the value of that investment increased tremendously compared to what the potential was for that condo. So took a hit, but on the flip side, great investment.
And I do think long-term you did well because I know that building and the maintenance fees right now are extremely high.
Are they? Yeah. It was a small building. So there's only, I think it was like an 8-story building or something like that. It was this, it was this low-rise building.
Yeah.
It has not many units.
No, but large units.
Oh yeah, like large units.
But the maintenance fees on them, I believe now are over $1 a square foot, like easy.
Yeah.
Like they were, I think at 1,100 or 1,000 square feet, it was like 1,200 a month.
Yeah, it should be because it has, it had a shared cost agreement with the hotel as well for the pool and some of the other things.
Yeah.
So they're picking up some of those costs as well. The developer developed the hotel as well. It was Walter Oster, who was the Whalers Group. He was actually a restaurant guy. He was a hospitality guy. He owned, at that time, there was this chain of restaurants called the Whalers Wharf. And he owned the restaurants where Queens Harbor is now. He was Wally Magoo's, and there was a pizza place there.
You know, the funny thing is that piece of land, every time someone has gone in, I don't want to say the business has failed, but the business doesn't last.
Yeah, very
Like, it is one of the hardest pieces of real estate to keep alive. Like, I wish them the best of luck at Queen Harbor, but it's been a pet social club. It's been a kids' playground. Like, I grew up on the Harborfront on Queens Keep.
Okay.
And
So you know
actually, I know the Queens Keep like the back of my hand, but my parents also had the ability to buy in the building that you're mentioning
Okay.
years ago.
Probably around that same time.
Around that, but I remember them getting a deal. It was like, it was worth at that moment, the condo that they were looking at was probably worth about $800,000.
Right.
And they found an opportunity where, like, it was an older woman. She was going through chemotherapy. She was like, I just want my money.
Mid-90s, probably.
Yeah. She was like, I want my money and I want to go. $500,000 and it's yours.
Right.
And my parents didn't do it because there was the old school immigrant mentality of like, you have one place and don't overextend yourself.
Right.
But looking back at all the places that they could have bought and they didn't buy,
Yeah.
that's the part that's shocking.
Yeah. Well, I don't think those units have gone up. Like the values have increased, of course, but the percentage increase, I think there's better investments. I think there's better buildings than that.
100%.
Yeah.
But you got to remember, they were conservative people from the start.
Yeah.
Like, my parents had the opportunity to buy in North York a house, corner lot, for the same amount of money as they bought a condo in downtown Toronto because my mother's European and she wanted to see the water.
Yeah.
The increase on the same price, like I think they paid $130,000 for the condo. They could have bought a property there for about the same at the same time. That condo is probably worth right now a little under $1 million.
Sure.
The property that they could have bought is
$4
worth
million.
Yes.
3.5.
And to this point, they were like, why didn't we do the house?
Yeah.
But they didn't know.
Yeah.
And at that time, you wouldn't have known. No one expected that prices would skyrocket. If you asked someone that was paying 18% or 20% for their interest rate on a loan, like, they didn't know. They were just like, pay down the loan.
Yeah. And people's tastes have changed too. And Toronto's grown vertically tremendously in the last 35 years. People really, even in the 80s and early 90s, condos were considered second rate to a single family home. It was very much a mentality of, you should own a house. If you're going to have a family, you definitely should have a house. People who own condos were like people who couldn't afford houses. It's true now that people who buy condos sometimes can't afford houses, but there was a real stigma to people who bought condos to live in for themselves, not as an investment, to live in, or not as like students or short-term or whatever. So now I think people, even though we designed a lot of buildings with very, very small units, I think there is a shift. And I think people are saying, I may live in a condo for a long period of time. This may be my family home. I need to find a unit that's suitable, but I have to make this my home because you know what? I mean, unless I want to buy in Niagara, that's how far out I have to go if I want to buy single family. Like, I got to go to St. Catharines.
Once again, this is Property Play. I'm going to cut this a little short because this is probably the longest episode ever that we filmed, but there was so much in it. And if you like content like this, make sure to like, follow, and subscribe. We're going to bring Gary back again because there was so much knowledge in everything he has to say.